Hello, my name is David Das. Welcome back to my channel, Think and Retire. If you're like me, I'm sure you like the stocks, the stock market, and the passive and the dividend income. I'm always searching for safe dividend stocks and keeping an eye on which stocks to buy. Last week, I made a video on the safety of the dividend stocks. One of the viewers, Zed Goswami, wanted to see an example where a company dividend payout is unsustainable and the dividend payout is at risk. So thank you very much, Zed Goswami, for your comment. This video is going to address that particular question. So I did a quick research on some of the dividend cuts we had in the early part of 2023. These are few of the stocks which had the dividend cuts. I'm going to analyze two stocks and see if there were any warning signs before the dividends were cut. One of them will be Intel, which had a 65.8% dividend cut. And the second one, which I'm going to analyze, is the VF Corporation, which had a 41.2% dividend cut. At the end of the video, I'm also going to analyze two more dividend stocks which had not cut the dividends yet and see if there are any warning signs for the future. I'm assuming that you have done your research and you have picked the right stock and you bought at the right price. As I mentioned in the previous video, that for the utility stocks or the telecommunications, where they have high capital expenditures, and also for the REITs, things are a bit different. But this technique that I'm going to show you is valid for most of the stocks. The technique that I'm going to show you is very simple, and you can have access to all this information for free. So I am at msnmoney.com, and I'm going to analyze the first stock, which is the Intel. So I type in INTC, and I go to the analysis tab, and I scroll down to per share values. And what I'm looking for is picking three pieces of information: earnings per share, dividend per share, and the free cash flow per share. So let's talk about the dividend first. And I'm going to look at last 5 years. So if I put a cursor at 2018, I see the dividend was 1.18. So I go back and I put that 1.18 for 2018 dividend per share. I do the same thing for the 2019, which is 1.25, and I populate that for dividend per share information up to 2022. The next item I'm looking for is earnings per share. And I do the same thing, select earnings, and I put my cursor at 2018. The yellow one is for INTC, which is 4.41. I populate this 4.41. The next year, 2019, is 4.71. And I do the same thing up to 2022. The third item I'm looking for is the free cash flow per share. And again, I do the similar exercise and try to find the free cash flow information for 2018, which is 3.03. And I again populate this table up to 2022. In the previous video, I mentioned the dividends are normally paid from profits. So the dividend has to be lower than the earnings. It is also mentioned that it would be nice to have the dividends paid from the free cash flow. So let's see if this makes sense for this particular stock, Intel. So dividend per share in 2018 was 1.18, which is less than earnings per share, less than free cash flow per share. So this is good. 2019, same thing. The dividend per share is less than earnings per share and also less than the free cash flow per share. In 2020, same thing. The dividend per share is less than the earnings and the free cash flow. 2021, same thing. 2022, we have earnings, it is less than the earnings per share, but the free cash flow was negative. So let me put a red mark here. The other thing I mentioned in the previous video, the dividend per share has been growing, so earnings also has to grow. If you look at this row, earnings went from 4.41 to 4.71, which had a increase of 6.8%. The next year in 2020, the earnings have grown by 4.88%. But in 2021, the earnings has actually come down from 494 to 486, which is negative 1.62%. So that's a negative sign. And in the year 2022, the earnings has fallen further to 1.94, which is a decrease of 60.08%. So that's also a warning sign for the dividend cut. And eventually, it was announced in the early part of 2023 that the dividend now will be $0.5 per share. So looking at this example, we can see that we had warning signs from 2021 onwards that the dividend cut may be on the horizon. This is a big picture information as we are looking at the annual data. If you want to dig deeper, you should look at the quarterly information and see if there are any warning signs in the quarterly reports. So we are looking at Intel Corporation, and we are in the financial cash flow tab, and I'm looking at the quarterly, and we are looking at the cash dividends paid in 31st of December 2021, and Intel paid $1.4 billion in cash dividends. Free cash flow was negative $1.8 billion. So that's already a warning sign at the end of 2021. Let's look at the next quarter, which is the 31st of March 2022. They paid a cash dividend of $1.48 billion, and they had a free cash flow of $1 billion. Again, the cash dividends paid is more than the free cash flow. That's also a negative sign. Let's look at the June data from 2022. Intel paid a cash dividend of $1.5 billion, and they had a negative free cash flow of $6.4 billion. Again, that's also a negative sign. Now let's look at the September data, which is $1.5 billion they paid as cash dividends, and they had a negative free cash flow of $6.3 billion. So as we can see, the red flags have started way earlier than when the dividend cut was announced in the early 2023. I hope this information was useful. Now let's look at the next stock, VFC Corporation. The name VF Corporation may not sound familiar, but I'm sure you are all familiar with these brand names. So for VFC Corporation, again, we are going back to the MSN Money, and we type in VFC, and I go to the analysis tab. Similar to the Intel, we will be looking at the dividend per share values, the earnings per share values, and the free cash flow share per values. And I have populated the table with all the information from 2018 to 2022. Now let's go and look at the data in details. And again, the number one rule is to have the dividend per share less than the earnings per share and the free cash flow per share. So in 2018, the dividend per share was 0.45. It is more than the earnings per share. And also we had they had a free cash flow per share in 2018. These are red flags from the dividend safety perspective. In 2019, the dividend per share was 1.92, which is less than the earnings per share and less than the free cash flow per share, so which is a good thing. In 2020, the dividend per share was 1.87, which is more than the earnings per share, so that's a red flag. And again, the dividend per share was more than the free cash flow per share. So that is also not a good idea. In the year 2021, the dividend per share was 1.93, which was more than the earnings per share. So that's a red flag. In the year 2022, the dividend per share was 1.97, which was less than the earnings per share of 3.1. but the dividend per share was more than the free cash flow per share, which is a red flag. So we can see from 2018 to 2022, we had seen many red flags. And obviously, in the early part of 2023, they announced that the dividend will be reduced to $20 from $97 in the year 2022. So you got the idea how we can get these red flags well ahead of time before anything happens. So now I'm going to analyze two stocks which have not cut the dividends yet, and let's see if there are any warning signs moving forward. So the first stock I'm going to talk about is IBM. So we are in the MSN Money. Press the Analysis tab, and we are looking at the per share values, and we will populate a table with earnings per share, free cash flow per share, and dividend per share. So the dividend per share has been growing steadily from 6.18 in 2018, 6.39, 6.47, 6.49, 6.52 up to 2022. And currently, their expected dividend per share for the year 2023 is 6.6. So it has been growing since 2018. Now let's look at the earnings per share. So earnings per share was 11.74 in 18, 8.17, 4.15, 4.51 in 2020, 5.11 in 2021, and 2.03 in 2022. And the free cash flow per share was 12.31 in 18, 13.29, 16.69, 11.09, and 9.28 in 2022. Let's look at the dividend per share, whether it is covered by the earnings and the free cash flow. So 6.18 is obviously less than the earnings per share and the free cash flow per share, so which is good. In the year 2019, the dividend per share was 6.39, which is less than the earnings per share and less than the free cash flow per share, which is again a good sign. In the year 2020, the dividend per share was 6.47. The earnings per share was 4.51. So this is a red flag. They paid more as dividends more than the earnings in the year 2020. So let's highlight that. But the dividend per share was covered by free cash flow, which was 16.69. So that's a good sign. For the year 2021, the dividend per share was 6.49. Again, this is more than the earnings per share. So let's make that as a red flag. But the dividend per share was well covered by the free cash flow. In the year 2022, the dividend per share was 6.52, again, which is more than their earnings per share. So that's a red flag, but was well covered by their free cash flow, which is 9.28. Now, in the video, I talked about the earnings growth has to be more than the dividend growth. So let's look at the growth of the dividends. So the dividend growth has been 3.4% in 2019 from the year before, 1.25%, 0.31%, and 0.46%. So the dividend growth has been positive since 2018, whereas the earnings growth has been negative in 2019, 2020, and also in 2022. So those are also red flags in my opinion. These are the annual data. If you want to dig deeper, you can look at the quarterly data and see if there are any more red flags. Just looking at the data, it seems there are some red flags to consider if we want to invest in this company just for the dividends. Let's look at the last stock, which is 3M. They have been paying dividends, which have been growing steadily from 2018 to 2023. And let's look at the data and see if we can find any red flags in this particular stock. In 2018, they paid a dividend per share of 5.3, which is less than the earnings per share and the free cash flow, which is a good sign. In 2019, dividend per share was 5.67, which is adequately covered by earnings, which was 7.72, and the free cash flow. In 2020, the dividend per share was 5.82, which was covered by the earnings and the free cash flow. Same thing with 2021, 5.84 was dividend per share covered by earnings per share of 10.12 and the free cash flow per share of $10. And in 2022, they paid dividend of 5.94, which was covered by earnings per share and the free cash flow per share. The dividend for the year 2023, as we know today, is expected to be $6 per share. So far, we did not see any red flags. But the last item we have, the EPS growth has to be more than the dividend growth. So I have calculated the dividend growth, and you can see for the 2019, we had 6.98, followed by 2.65, 0.34, and 1.71%. For the earnings growth, we had a negative earnings growth in 2019. So which is a red flag. But again, this is from 2019. Since then, it has grown. If we compare 3M versus IBM, we have more red flags in IBM than in the 3M. So you can make a decision where to invest. I hope you enjoyed the video. Thumbs up if you like it, and I will see you in the next one.